UBA breaks records in significant ways. Flour mills targets 200 billion and many more to come.
Every time we have gone on a fight with the regulators, there's only one loser. And you can imagine. That loser is actually government. They're actually one of the highest taxpayers.
It's Follow the Money with Ugo Dre. Remember that you can listen to us on podcasts, on Spotify, Apple, and all other podcast channels. And you can also watch us after the show on the Nairametrics YouTube channel. My name is Wade, sitting in for Ugo Dre. The market last week, it went down a bit. Stock market ended the first week of October in the red. ASI fell 0.95, surrendering some of the gains that it had accumulated in the previous week due to sell-offs in large cap stocks. The ASI shed 938.14 points to close at 97,520.54, down from the previous week's 94,458.68, with a total market volume of about 1.6 billion shares for the week. Notably, 45 equities appreciated during the week, maintaining the same number as the previous week, while 33 equities saw decline. Again, mirroring the prior week. Meanwhile, 73 equities remained unchanged. That's the market wrap-up for you last week. But let's look at the performance as a whole. The index kicked off the week on a positive note, but after a public holiday on Tuesday, it tumbled midweek. By Thursday, it had lost 1,167.97 points before rebounding slightly on Friday with a gain of 456.12 points. Weekly market volumes dropped sharply to 1.6 billion shares, a 44% decline from the 2.9 billion shares exchanged the previous week. In sector performance, oil and gas led the way with expanded gains. The insurance sector also saw upward movement. In contrast, the banking index lagged, ending the week lower. Top gainers. When we look at the top gainers, Deep Capital Management and Trust PLC led the week gainers with a 31.53 jump. Seplat following closely, not very closely, but climbing 21%, with Triple G and Company PLC rising by 20.34%. Other notable gainers on the chart were Veritas Capital Assurance PLC, 20% up, closing at 1 naira 68 kobo. Regency Assurance PLC up 18.84%, closing at 82 kobo. Africa Prudential PLC up 18.33%, closing at 10 naira 65 kobo. Livestock Feeds PLC up 17.14, closing at 3 naira 28 kobo. RT Briscoe 16.28%, 350 closure. NEM Insurance PLC 14.38, closing at 8 naira 75 kobo. And CWG PLC up 10.71, closing at 6 naira 20 kobo. The losers were led by McDonald's PLC with a 15.63% drop, followed by Fidelity Bank PLC, which declined by 13.3%. Over the week. Other decliners include Dangote Sugar Refinery, down 12.2%, closing at 30 naira 60 kobo. FBM Holding PLC, down 11.19%, closing at 25 naira. Dangote Cement PLC, down 9.88%, closing at 2 naira 28 kobo. Eternal PLC, down 9.74%, closing at 3 naira 8 kobo. Academy Press PLC, down 10%, closing at 478 naira 80 kobo. PZ Cousins Nigerian PLC, down 10%, closing at 27 naira. NASCON Allied Industry PLC, down 9.78%, closing at 2 naira 86 kobo. Ella Lakes PLC, down 8.54%, closing at 4 naira 50 kobo. Major corporate announcements during the week, which signified the major activities during the year. During the week, UBA, United Bank for Africa PLC, released its Q2 2024 financial statement. We'll be talking more about that once we're done with this corporate announcement. Guinness PLC announced board changes. Lasakwa Assurance published its Q1 2024 financial statement. Stanbic IBTC PLC revealed leadership changes. Access Holding PLC secured approval for the merger between Access Pensions Limited and ARM Pensions merger. We'll get more about that as we go on in the show later this month. Micure Industry PLC sold a 10% equity stake to Xerox Investment. And Fidelity Bank released its Q2 2024 financial statement. Remember, we said at the beginning of the show, UBA broke records this week, and that is where we're going to. During the week, UBA, Africa's global bank, released its audited financial statement for the half year ended 30th June 2024, showing impressive performance across many of the key financial indicators. The audited financials released to the Nigerian Exchange Limited on Monday showed that the bank recorded double-digit growth in its gross earnings and operating income. It's seen a record high in terms of dividend being paid by anyone in the industry, in the markets so far. At the end of the first 2 quarters, in spite of the global macroeconomic climate and headwinds in Nigeria, as well as geopolitical environment challenges across major countries where they have their branches, UBA recorded a 39.6% increase in its gross earnings, which rose from 981.77 billion in 2023 to 1.371 trillion in June 2024. Interest income increased by 134.3% to 1.003 trillion, up 428 billion recorded in June last year, while total assets went up by 37.2% from 20.6 trillion, where it closed at December 2023 to 28.3 trillion. Customer deposits also leapt at 3.7% in the same period to close at 23.2 trillion, up from 17.3 trillion recorded at the end of 2023. The results which was filed showed profit before tax stood at 403 billion in June. June closed the half year at 402 billion, while profit after tax dropped slightly from 378 billion to 316 billion in the year under consideration. Shareholders' funds increased by 47%, from 2.03 trillion in December 2023 to 2.99 trillion. In line with the bank's culture of paying both interim and final cash dividend, UBA declared a record-breaking interim dividend of 2 naira per share for every ordinary share of 50 kobo held by shareholders. This represents a 300% increase when you compare it to 0.5 or 50 kobo declared in the similar period of 2023. This is the highest interim dividend ever paid by any bank in Nigeria. A quote from the group managing director and chief executive, Mr. Oliver Alawuba, says that UBA has continued to deliver strong double-digit growth in high-quality and sustainable banking revenue streams driven by a focused growth in balance sheet, transaction, and digital banking business across the geographies in line with our strategy. We know UBA is one of the big banks in Nigeria. They've continually turned out impressive results. And according to the executive director, finance and risk, Ugo Wagodo, who expressed his delight at the milestones achieved by the bank driving operational efficiency as reflected in its cost-to-income ratio normalizing around 50%. Also in the news, Flour Mills to raise 200 billion. Flour Mills of Nigeria plans to raise additional capital of 200 billion subject to the approval of its shareholders. This was disclosed by the company secretary at the 64th annual general meeting. According to the disclosure, to consider and, if thought fit, approve the authorization of directors to raise additional capital to the tune of 200 billion. The reason for the proposed raise was not disclosed, however, by Flour Mills. Just last week, Flour Mills of Nigeria announced that its majority shareholders, Excelsior Shipping Company Limited, has offered to acquire all shares held by minority shareholders, a move that could result in the company delisting from the Nigerian exchange. We've seen so many companies delisting over the last couple of years. Also in the news, major news are coming. Access completes its merger with ARM Pension. Access Holding has announced the completion of its merger with ARM Pension Managers, creating Access ARM Pension Limited. The development positions AAPL amongst Nigeria's largest pension fund administrations by client base. The announcement was made on October 2 and was shared through the NGX disclosure page and signed by the company secretary, Sunday Ekoche. Implications of the merger: with the merger finalized, AAPL now manages nearly 3 trillion in assets and serves a customer base of approximately 2 million retirement savings account holders. According to the disclosure, the merger strengthens access service enabling the company to attract top talent, invest in client-driven innovation, and enhance risk management and compliance. The strategic move is also expected to deliver sustainable growth, providing added value to clients, shareholders, and partners. Finally, in the first part of this show, Micure Industries PLC has announced the successful acquisition of 10% equity stake in the company by Xerox Investment Limited. Development was announced on October 4 through a disclosure on the Nigerian exchange signed by Ifedamola Oluwasegun, the company's chief financial officer. According to the disclosure, the transaction was conducted off-market and has since been finalized with the approval from the NGX, officially making Xerox Investment a key shareholder in Micure. The investment will reinforce Micure's financial foundation and fast-track its growth strategy, positioning the company for expanded operations within Nigeria's pharmaceutical and healthcare sectors. What are the implications? According to the CEO, Ajun Udani, welcome Xerox Investment Limited as a significant shareholder, remarking, "This investment highlights the confidence in our long-term vision and our commitment to providing quality healthcare plans and further contribute to the healthcare sector in Nigeria and beyond." Also commenting, the Xerox MD and Chief Investment Officer, Samson Esemwede, also expressed his confidence in Micure's future on the Nigerian Stock Exchange, stating, "We see the stock market as a theater for transformation, and Micure Industries is poised to become a dominant player in pharmaceutical value chain across Africa. Micure focuses on building local pharmaceutical capacity is particularly attractive to us." According to the disclosure, this acquisition will help Micure enhance operational efficiency and gain greater access to resources, positioning it for a stronger market. On the other side of the show, we will be talking about the retail market in Nigeria and in Africa as LBS and Nairametrics partners for the second year to bring to you the African Retail Congress and Awards 2023, which will happen on November 9, 2023. We will be speaking to Dr. Chidi Okoro, who is our guest this morning, once we get back from this short break. Thank you. Welcome back to Follow the Money with Ugo Dre. I am your host, Wade Ahimie, sitting in for Ugo, who is on holiday. Just before the break, we spoke about talking about the retail business in Nigeria and Africa. In 2023, the LBS partnered with Nairametrics towards ensuring that we get out more information about the retail businesses in Nigeria and in Africa. And not too long ago, I think Friday, September the 27th, Nairametrics also partnered with EFS towards bringing you the first MSME Finance Awards ever to be staged in Nigeria. A successful show, a successful event for Nairametrics and EFS. And today we'll be talking retail business, not just in Nigeria, but across Africa. This is set against a rapidly changing global economy for Africa retail business, which faces unique challenges and opportunities for growth. To shed more light on this is Dr. Chidi Okoro. Dr. Chidi Okoro is the alternate academic director of Africa Retail Academy at Lagos Business School and founder and chief executive consultant of Drugs and Medicaments Nigeria Limited with over 30 years experience. He has held executive roles across various industries, including FMCGs and telecommunications. Good morning, Dr. Okoro. Glad to have you here.
Thank you. Delighted to be here. Thank you very much.
Last year, LBS partnered with Nairametrics for a huge event, which was the second Retail Academy Congress and the Retail Academy Award. A very successful event that was held, and so many participants and so many awardees who went away with awards and were recognized, not just by the LBS. This partnership, which started last year, has shown that both the LBS and Nairametrics are huge on thought leadership and also driving and getting more information as it relates to the retail markets. I just spoke about us talking about the MSME Awards, which we had. But this year, we want to focus on resilience and how retail markets in Nigeria and Africa performed. What factors are driving that growth? Where are the gaps? And how are businesses leveraging infrastructure funding and tech to enhance efficiency and sustainability? And my question to you goes on to say, how has the retail market in Nigeria and Africa performed over the past year, considering resilience, access to infrastructure and funding, and the incorporation of tech solutions to optimize supply chains and improve operational efficiency? Dr. Okoro.
Thank you very much. Thank you. As we all know, retail is well etched into the economy. It's retail, you say, is the last mile for productive sector. No matter what you produce, service, product, retail is where the shopper meets the product or service. So we are glad with this partnership between LBS and Nairametrics. So let's speak about how is retail surviving the times. First of all, retail sector continued to grow above 10%, well above 10% in Nigeria, across Africa, still well above that. That's with all the challenges they have. And so you can say, how have they performed overall? First of all, expansion continued. They are recovering from all the punches that retail is feeling in the marketplace. We see a sector that's quite resilient, and there are things driving that. There are a couple of things driving. Number one is urbanization is rising in Nigeria and across Africa. The middle class is emerging and continue to emerge. And one thing about the middle class is that they have different behavior. They have different ways of behaving or thinking. The moment they experience positive retail, they are going to go back to that. So that's number two. They desire convenience, and I think the retail structure that we're seeing today deliver convenience. Certainly, technology is having a play, with technology infrastructure expanding in Nigeria, payment systems, telecoms, etc. So retail overall seem to be doing well. And people are now getting into investment in retail infrastructure for brick and mortar. And people are consciously putting investment there. And there are challenges still. Logistics is a big issue, certainly bigger infrastructure challenges, but retailers in Africa have discovered or are devising ways to get around those challenges like logistics. So you've seen companies focusing on just logistics. I think companies like Glovo are here. I think they're playing across many countries in Africa. So overall, retail has remained resilient, and I think one of the ways retail is remaining resilient is through innovation and learning from mistakes of the past. Because in the past, retail did take off in Africa. It slowed down a while with the economy, but today's retail is slightly different. We're riding the challenges of cost and all of that. The other thing retailers are doing is a supply chain innovation. They are sourcing more locally, and when people source more locally, you can predict the cost a bit better. Not that it's going to be much cheaper, but you can predict the cost. So you have more experience coming, and with the likes of LBS and Nairametrics coming into that, providing data for people to make the right choice, with LBS really spending and investing behind capability development and thought leadership, we think today and the future seem bright for retail in Africa.
So when we look at all that, Dr. Okoro,
yes.
How do we harness those market potentials? We saw last year's success. Let's reflecting on those and those lessons learned in unlocking the retail potentials. We saw a number of retailers who were glad and excited to be part of last year's event. How are these insights shaping this year's initiative, and how is this collaboration between LBS and Nairametrics driving innovation and new projects?
Yeah, I think the first thing is let's look at this collaboration between LBS and Nairametrics. One of the things it brings for everyone is issue of understanding consumer behavior. Really delving into key insights. That's key, critical for retail for a sector to thrive. thrive, they have to have good insight. I think one of the things that this partnership or the last year's conference brought is understanding of customer behavior. People are now sharing and collaborating a bit more. So collaboration is coming in, bringing retailers together under one roof. They see themselves as competitors outside of a room, but at the LBS Nairametrics initiative, the LBS Retail Academy or the LBS Retail Conference, they see themselves as co-opetitors. They collaborate to try to unlock the opportunities in the industry. So one of the things we picked up, first of all, understanding consumer behavior is number one. Number two, the need for collaboration, more collaboration, because at the end of the day, all of the retailers are facing the same regulatory environment. They are facing the same infrastructure challenges. So collaborating to ride these stamps is one thing that we have seen coming through. And then the other one is that we're focusing a bit more on digital transformation. People see the need, after those conversations, people see the need for that digital transformation. You do have probably, I think, nearly 100 million mobile handsets in Nigeria that are digitized. So if a retailer that's not looking at that sector, certainly the mobile sector or the digital sector will be losing the battle. So one of the things the conference focused on last year was also on digital transformation, seeing digital as a strategy, seeing it as a channel, not a continuation of what we're doing. That's one thing the conference did point out. The other one is sustainability and ethical practices. That also comes to the fore. Running a business, even retail, no matter the business, is a marathon. And one of the ways to keep it going is you got to be ethical in your practice. And the conference did call attention to this. So those are the various areas. So one is on really focusing on consumer behavior, understanding the shopper consumer behavior, getting into the issues of sustainability, ethical practice, and focusing on digital transformation. That came to the fore from last year's conference, and it will actually be delved into in a conference coming up this year. Thank you.
And I think I purposely left out this question for you to give us a better explanation in terms of performance, in terms of harnessing the potential. But we spotlight innovation in this year's event, and the African retail landscape is evolving with shifting consumer behaviors that you've spoken about, sustainability, ethical practices, global economic fluctuations. We've seen what has happened in Nigeria over the last year and a half. How are we leveraging innovation to stay competitive while adapting to regulatory challenges? Because this is an issue that a lot of the retail consumers and retail businesses face. Regulation. We've seen what has happened in terms of, there was a report that just came out this morning. Retail businesses pay about 49% of their earnings in taxes to the government. How do we do this, and how do we manage this? And just give us a comprehensive overview of what we need to do and how this partnership has shed more light on this.
So I think innovation is key. It's one of the platforms for growth, one of the drivers of growth in retail in Africa recently. One of the things this collaboration is brought to the fore is research and insights. I mean, LBS certainly is using its academic expertise, in that game. And we all understand the power of Nairametrics and the Naira and Kobo of things, So bringing both together, first of all, research and insights, that's critical. I think that's one way to, if you want to unlock innovation, you got to have insight to be able to unlock innovation. So this partnership does bring that to the fore, and I think that will come again to the table at this year's conference. The other one is training and capacity building. Again, this is LBS core, which is about training, capacity building, and then leveraging on Nairametrics insights, leveraging on the research that they do in the economy. That will really help enrich the training and capacity building for retail operators. Another one is networking and collaboration opportunities. I think this forum brings a lot of retailers together, both people who compete and people who don't compete. And so the third one is about networking and collaboration opportunities that will really come to the fore at this conference. So those are the three areas that we can that this partnership can enhance innovation. If one of the ways we think that retail will continue to thrive is certainly to remain innovative, and to do that, certainly you have to understand the customer, the shopper you're trying to serve. So those are the three areas that this conference or this partnership brings to the fore.
So what are we going to, just briefly, regulation, how do we tackle that? Because it's a major issue. I know I spoke about the 49% in terms of taxes. I know that the chairman of the Fiscal and Tax Committee has said retail businesses will pay less. What do you think this brings to fore?
Yeah, I think one of the things we have to understand, I mean, I play in retail myself, and I sit on the board of a couple of retail companies. Every time we have gone on a fight with the regulators, there's only one loser, and you can imagine. We assume there's only one loser, by the way, and that loser is actually government. Retail employs over 50%, both informal and formal retail, over 50% of employment. They're actually one of the highest taxpayers, because when you aggregate the stuff we pay for. So I think one of the things we do is we need to start collaborating a lot more with regulatory authorities. That's one of the ways. And one of the ways to do that is, first of all, collaborate amongst ourselves and engage government with fact and data about what we do in the economy. That's critical. We also have to understand the government side of things. When we bargain as a collective, we have a chance of winning with government. So in terms of regulatory authorities in Nigeria are not going to change. They are more revenue generation authorities than regulatory authorities. And a lot of time they don't realize that they are the biggest stakeholder in the retail business. They actually get paid before the owners of the business, because when you have to pay your tax before you get your net margin or net profit. So first thing is, first of all, we collaborate amongst ourselves, understand our common challenges, and then we engage regulatory authority from point of view of helping them understand what we go through, what we're going through, what we make, and what we don't make. The more they understand us, the better they understand the retail environment and the challenges we face and the opportunities in the environment, the more they want to collaborate. So we need to go to regulators as collaborators rather than adversaries. That's one of the things I think.
So Dr. Okoro, in 20 seconds, tell us more about this year's Academy and awards.
Yeah.
The Congress and the awards, sorry.
Good. So I think the Congress is here. It's here in November.
November 9th?
November 9th, Sunday, the Congress at the LBS Lekki Ekpe campus. We have retailers from all over Nigeria, Africa coming in. It will be streamed live, So we are again partnering with Nairametrics. There are a couple of awards coming. One of the big awards is innovation again. We think innovation is a plank for development. Also sustainability, that's critical. We also think that these are areas that will drive a retail for the future. We have regulatory bodies actually coming in. We have a commissioner out of Lagos State coming.
We just have to, time is never our friend, and we need to quickly end the show here. This has been Follow the Money with Ugo Dre. I have been your host, Wade Ahime, and in partnership with UBA. Remember to join us every Monday, 8 a.m. And remember that the Africa Retail Congress and Awards is on November 9, 2024 at the LBS complex. Thank you, and over to you, Chico.